Okay, folks, welcome to Best Stock Charts for the coming week. Normally, I do 5 charts that I like. I think we have 6, maybe 7 to go over. So we're going to talk about those in a moment. We're going to be using TrendSpider to go over those charts. We're also going to talk about how we did last week. Why are you listening to me? But before we do that, I want to talk first about something I mentioned to members. It was part of our strategy going into the new trading year. And I said, we're going into the new trading year with a big pile of cash because we completely expected a Santa Claus rally going into the back half of the year. Check that box. We got it. But I also expected a lot of volatility as we proceeded into the new trading year. Check that box. We got it. And listen to what I had to say to members last week on the week ahead commentary about macro monthly charts and why it's so important to look at them. And also, in the same clip, the 10-year yield. Have a listen. All right, so I want to talk about monthly charts because the monthly charts are going to give us a clue as to where we're going to go in the new year. Maybe the market, as measured by the S&P 500, is going to go up, but maybe what has led us higher may not continue to lead us higher, and we have new emerging breakouts in terms of sectors. What might those be? First off, of course, we always need to go over the bond market, the 10-year yield. What did it do? Well, for the month of December, it did a retest of a breakout point, and it held, and then reversed to close up, and more importantly, above the upper band of resistance. Folks, this is a very, very bullish setup. So right off the bat, at a bare minimum, consolidating yields with quite possibly and probably a bias to the upside. Now, when do we get nervous about interest rate sensitive stocks coming under pressure? Well, we get nervous when we begin to break out to new higher highs. First price target 16.93 on the TNX. So that's 1.693 on the 10-year yield. Okay, so that's the comment that I had about the 10-year yield last week. And as I pointed out, we had seen a major reversal bar for the month of December. And sure enough, we got a continuation blowout move, not just on the month, but just in 1 week last week, a move up higher on the 10-year yield of over 17%. That's a massive, massive move. And I mentioned that you needed to watch for a breakout to new higher highs. Until then, it's all just conversation. The observation is that we're watching on a monthly chart. But now we have a breakout above 1.693 on the 10-year yield. We hit a high last week of 1.801. We haven't seen that level since early 2020 on the 10-year yield. So to say that last week was not significant would be the understatement of the year. Now, I also pointed out in that clip that just because the 10-year yield doesn't necessarily mean that the stock market as a whole is going to roll over. It just means that in all probability, at a bare minimum, you're going to see sector rotation. Did we see that last week? Yep, that's exactly what we did. All you need to do is take a look at 2 separate sectors. The banks, this is the FAS, leveraged ETF, of which we are long of, and we had a great week last week, up nearly 14.5% on the week alone, and it appears as though we're going a lot higher. Why? Why did the banks go up? The banks went up because yields went up, and this is what I always try to teach people. A lot of people, they don't want to hear it. They just want to hear hot stock picks, and they want to move along. It's important to know the whys behind why each sector is doing what it's doing. The reason why the banks are doing well is because banks love rising yields. It helps their NIM, net interest margins. So the banks are taking off. Add to that, earnings coming out soon. What else did well last week? Look no further. Energy. Energy was up. This is the XLE up 10.5%. A major, major move and a major, major multi-week breakout. So it's not as if there's not a bull market somewhere. There is. It's just not in your typical FANG names. Your FANG names are just on the precipice of a big, big breakdown. And I'm going to use a broad-based sector here, the TripQs. Now, the trip Qs are so far down on the month, 4.5%. That's a pretty big move. But did you know that high beta tech has been in the bear market for months? Look no further than Kathy Woods' ARK fund, which put in a high of 158.82 back in February of 21. That's almost a year ago. Think about it. And ever since then, lower highs, lower lows, and Kathy Woods got a lot of problems on her hands because she's already down on the year 10.75% on this fund alone. So in this environment right now, high beta tech does not work. High beta genomics does not work. Just take a look at her genomics fund. That was down nearly 11.5% on the week alone last week. And guess what? It's going lower. So I mentioned earlier that we planned on going into the new year with a big hoard of cash. We executed on that. How was our week last week? It was pretty good. We sold a Strangle on NVIDIA. For those not familiar with what a Strangle is, I have an explainer video below. We like to sell premium for cash flow, not buy premium, meaning not buy options unless we have an edge. And we were able to close out 2 profitable naked call trades last week. We still have another open along with a naked put, so that's a Strangle. And we also opened up a new trade on CRM, Salesforce.com. Why did we do that? Well, we observed that the options are becoming very expensive. So what do? We used our probability calculator, and we also took a look at the charts to identify support and resistance. And we sold more Strangles. We're just going to generate cash flow here and wait for this market to bottom out, and then we'll put capital to work. Was it all moonlight and roses last week for us last week? No. We started off the week very strong with our gold stocks, but the FOMC minutes came out and those names got hammered. So a rough week for precious metals. However, I think that they are going to recover in the coming week and weeks, so we are going to remain long of those names. So let's talk about stocks that we like going into the new trading week, and not just stocks, ETFs. The first one up is going to be Kellogg. This was brought to my attention by one of our fellow members, Mohammed. He was concerned about the daily chart being overbought, and he's right. The daily chart is overbought. But what we do here at the Contrarian Trader is that we're looking for macro breakouts. To identify a macro breakout, meaning a long-term breakout, you need your monthly charts. And Kellogg's has been consolidating since 2016, arguably 2015. And at current, you could see I have an alert set up here already. Here's the alert. We're looking for a breakout point retest on Kellogg's. What does that mean? Well, on this monthly chart, I want to see it retrace back down to support. It could happen on a weekly chart. I'm going to overlay monthly support and resistance. You can see in dashed line, we have monthly support below on a weekly chart. In solid line, we have weekly resistance above. So I'm liking this setup here on Kellogg's. All we're looking for, again, is a slight retracement. Kellogg's is yielding about 3.5%, very attractive. So Kellogg's looking very strong as we move into the new trading year. The next chart up, Hawaiian Electric, monthly chart. You could see that on the month we have already broken out. This is a macro breakout. I'm going to take off the automated trend lines, throw them back on, and you can see that we have higher lows. Now we have broken out. I have my alert set here because I want to get notified. Let's go to the weekly chart. I want to get notified of when we retrace on a weekly time frame and retest this breakout point. I want to make sure that it holds, and then we get a continuation move higher off of that retest. And here is our alert here, and we're good to go. Our stochastics are rising. Love the setup here on Hawaiian Electric. The next chart up, IDX. This is an ETF. IDX puts you long of Indonesia. Why do I like emerging markets right now? Well, on Thursday Night Stock Charts Live, if you joined in, you would have heard me say the dollar looks very, very bullish, but there's one trading day left to go. That one trading day meant a lot because it sold off very, very hard. Net still closed up on the week. But the dollar's in a lot of trouble right now. And you may be saying, what does the dollar have to do with IDX or emerging markets. It has everything to do with emerging markets because emerging market debt is denominated in US dollars. If the US dollar declines, emerging markets get a tax cut. So, Indonesia, monthly chart. We are breaking out. Still early in the month, but we already have on a weekly time frame a weekly breakout. We do have resistance immediately above, as noted by, again, the automated trend lines. Folks, I'm using TrendSpider, 35% discount code below if you want automated technical analysis. Huge time saver. I'm going to create an alert here to see whether or not we do a retest, and we'll keep that active for a few weeks. But I also want to get notified, should we break out above this resistance level? I already have an alert set here. Good. So our alert is set. 2 alerts are set. Volume on the week last week, very strong. Loving Indonesia. The next chart up, TECK Resources. This is a weekly chart. Let's first go to a monthly chart. Again, folks, we're using a macro view here. Note, no 15-minute charts, no 5-minute charts. We're not day traders, not even a daily chart. We're looking for macro breakouts. We want to see sustainable rallies in a very difficult market right now. We want to see new leaders emerge. This is how you do it. So monthly chart, TECK, new monthly higher highs. We broke out above resistance. I want to set up an alert here just in case we retrace next week, and we'll keep that active for a couple of weeks. Weekly chart. Here's where we set our alert. Now take note, I don't want to go chasing this stock. Why? Automated technical analysis, folks. It's telling us that we have resistance up here at around 31.50 per share. Where do we close? At 30.41. So from a risk-reward perspective, we don't want to chase here because we have limited upside before we hit resistance. So we want to wait for a retrace back down to support. Then we'll open up a trade. I send out alerts on all of our trades to members. So sign up for our 14-day free trial offer and get TrendSpider for free with silver and gold level memberships. BCE, next stock up. Let's stick with the theme. Monthly chart first. You can see that we have a lot of monthly resistance above. Stokes are very strong, slightly overbought. Weekly chart. Let's overlay those weekly resistance levels on a monthly chart so we don't forget about them. There they are in dashed line. We have weekly resistance immediately above. We have an alert set, BCE. I want to know if we break out above this resistance level. If so, then we nibble and we open up a position. Now, if we rally up and through, monthly resistance up here will add more. But right now, we want to be aware of the fact that, hey, even if we break out above weekly resistance, we're going to have more resistance up here. Don't get too heavy with any one individual trade right now. This market is way too volatile. I'm going to leave it off with LABU. Now, LABU is a leveraged ETF putting you long on the biotech sector. I just pointed out Kathy Woods' fund is getting hammered, the genomics fund. A biotech is in general getting hammered. And in all probability, LABU is going to go lower. We can hit the high teens here. So be very, very careful with entering this trade. Right now, it's like catching a falling knife. We are at lows not seen since April of 2020. Think about that. That's the COVID sell-off. So a lot of technical damage has been done here. And God forbid we break down below the lows of March of 2020, we can go a lot lower. I'm not predicting that as of yet, but right now I want to take an over-the-horizon approach to trading this market. What does that mean? I want to sell premium, meaning if I'm bullish on LABU, I'm not buying it at the market on Monday. I'll sell a 20 put going out 30 days and generate a credit and average down my basis cost, but I'm not going to go out and buy those shares right now. You may say, what about selling a covered call if you buy the shares? No, that is not a strategy. You should not sell covered calls as a strategy against a stock that's in a downtrend. Never, ever. Don't do it. And with that, folks, don't forget, join us tomorrow night, Sunday Night Futures Live, 6 p.m. Eastern Standard Time. If you're new to me, you don't know what I'm all about, I have 2 videos below. One is my 5-part video tutorial on my top 5 favorite candlestick patterns. Also, my explainer video on what a strangle is. Use those links below. And until tomorrow night, everybody have a great weekend and a profitable trading week. Be well.